If you're on Social Security, stop scrolling because March is changing your money. Some people are getting more, some are getting surprised, and some are about to find out they were underpaid for years. In the next few minutes, I'm going to show you exactly what's changing, when your money is coming, and how to make sure you don't lose a single dollar you've already earned. Stay with me till the end because one of these updates could directly affect your check. And before you click away, there's one change most people completely miss, and it's costing some retirees hundreds of dollars a month without them even realizing it. If you're on Social Security or getting close, this channel is for you. I break this stuff down in plain English. No confusing government talk, no scare tactics, just real updates that affect your money. I don't cover everything. I cover what actually matters to people living on Social Security. First, let us just take a quick step back and talk about what Social Security actually is, because a lot of people have been paying into this system for decades, but do not fully understand how the whole thing works. And that is totally okay. That is exactly why we are here. Social Security is basically a program run by the federal government that provides monthly payments to retired workers, people with disabilities, and the families of workers who have passed away. You pay into it your whole working life through those payroll taxes that come out of your paycheck. And then when the time comes, whether because you retire, become disabled, or lose a spouse, the government starts sending that money back to you in the form of monthly benefits. Millions of Americans depend on this money not just as a little extra cash on the side, but as their main source of income. For a lot of seniors especially, Social Security is the difference between being able to pay rent and not being able to. So when something changes with Social Security, it is a really big deal. Now, March of this year is bringing some shifts that are going to be very noticeable for a large chunk of Social Security recipients. And when we say noticeable, we mean it in both good ways and in ways that people are going to need to pay close attention to so they do not get caught off guard. The first thing people are going to notice is related to their payment amounts. Back at the start of the year, there was a cost of living adjustment which most people have heard called a COLA. This happens every single year, and it is designed to help Social Security payments keep up with inflation. Inflation, as most of us know all too well by now, is just the way that prices go up over time. A gallon of milk costs more today than it did 5 years ago. A tank of gas costs more. Rent costs more. Groceries cost more. The COLA is the government's way of saying, hey, we know things are getting more expensive, so we are going to bump up your payment a little bit to help you keep up. This year's COLA was set at 2.5%. Now, at first glance, that might not sound like a whole lot, but when you do the math, it actually adds up. If you were getting, say, $1,800 a month in Social Security benefits before, a 2.5% increase means you are now getting about $45 more every single month. That is $540 more over the course of a full year. And for people who are on fixed incomes and are counting every single dollar, that is not nothing. That is real money that can go toward groceries or a utility bill or medication or just a little bit of peace of mind. Now, March is the month where a lot of people are really starting to feel this change in their everyday lives because the new amounts have been flowing through the system and hitting bank accounts consistently. But the payment amount is not the only thing changing. Let us talk about payment dates because this is where a lot of people can get confused and even a little worried if they do not know what to expect. The Social Security Administration, which is the government agency that runs all of this, does not just send everyone their check on the same day of the month. They have a system that is based on your birthday, specifically what day of the month you were born. If your birthday falls between the 1st and the 10th of the month, your payment comes on the second Wednesday of the month. If your birthday falls between the 11th and the 20th, your payment comes on the third Wednesday of the month. And if your birthday falls between the 21st and the 31st, your payment comes on the fourth Wednesday of the month. There is also a separate group of people who started receiving Social Security benefits before May of 1997. And those folks get their payments on the third of every month regardless of their birthday. So in March, what that means practically is that different people are getting their payments on different Wednesdays throughout the month. And because March has a specific calendar layout this year, the dates fall in a way that might feel a little different than what people were used to in January or February. Some folks are getting their payments earlier in the month than expected, and some might feel like they are waiting a little longer. If you are ever unsure when your payment is coming, the best thing you can do is log into your My Social Security account on the official SSA website, which is ssa.gov, and check your payment schedule there. That account is free to set up, it is secure, and it tells you everything you need to know about your benefits in one place. Now let us talk about something that has been a really hot topic lately, and that is the Social Security Fairness Act. This is a big one, folks, and if you have not heard about it yet, you are going to want to pay close attention. The Social Security Fairness Act was signed into law, and what it does is it eliminates two provisions that have been around for decades and that a lot of people honestly felt were pretty unfair. Those two provisions were called the Windfall Elimination Provision, or WEP, and the Government Pension Offset, or GPO. Now, those are fancy government terms, so let us break down what they actually mean in real life. The Windfall Elimination Provision affected people who worked in jobs that did not pay into Social Security, like certain government jobs, some state and local government positions, and some jobs in other countries, and then also worked in jobs that did pay into Social Security. Because of WP, their Social Security benefit was reduced, sometimes quite a bit. The idea behind it was to prevent people from getting what the government called a windfall by collecting both a pension from a non-Social Security job and then also a full Social Security benefit. But critics of WP argued for years that it punished workers who had done everything right, who had worked hard in multiple jobs, and who deserved the full benefit they had earned. The government pension offset was similar, but it specifically hit spouses and surviving spouses. If someone received a pension from a government job that did not pay into Social Security, the GO would reduce or even completely eliminate their spousal or survivor benefit from Social Security. There were widows and widowers out there who were losing their entire survivor benefit because of this rule. You can imagine how devastating that was, especially for people who had been counting on that money to get by after losing their husband or wife. With the Social Security Fairness Act eliminating both of these provisions, millions of people, and we really do mean millions, are going to see their benefits increase. Some people are going to see modest increases of maybe a few hundred a month, and others, particularly those who were hit hard by the GO, could see increases of several hundred or even more. The Social Security Administration has been working through all of these cases and processing the changes. And in March, a lot of those adjustments are either happening or people are starting to receive notices about what their new benefit amount is going to be. If you think you might be affected by this, meaning you worked in a government job with a pension and you are having your Social Security benefit reduced, now is absolutely the time to log into your SSA account or call the Social Security Administration directly to find out what your updated benefit is going to look like. Let us also talk about what is happening with Supplemental Security Income, which most people know as SSI. SSI is a little different from regular Social Security retirement benefits. It is a program designed specifically to help people who have limited income and limited resources, including elderly people, blind individuals, and people with disabilities. You do not have to have a work history to qualify for SSI, which is a key difference from regular Social Security. The maximum federal SSI payment for an individual in 2025 is around $967 per month, and for a couple it is around $1,450 per month. These amounts also went up with the COLA adjustment. And for people who rely on SSI, that increase matters just as much as it does for retirement benefit recipients. One thing that is really important to understand about SSI is that it is separate from your regular Social Security retirement benefit. Some people receive both, which is called concurrent benefits. And if that is your situation, you are going to want to make sure you understand exactly how much you are getting from each program and when those payments are coming. SSI payments actually come on the first of the month, which is different from the Wednesday schedule for retirement benefits. So if you get both, you might see money coming in on two different dates, and that is totally normal. Now let us talk about something that affects a lot of people, but that not everyone knows about, and that is Medicare premiums and how they interact with your Social Security check. Most people who are on Medicare have their Part B premium automatically deducted from their Social Security payment every month. Medicare Part B is the part that covers doctor visits, outpatient services, and things like that. The Part B premium for 2025 went up this year, And that increase comes directly out of your Social Security check before it ever hits your bank account. So, while your overall Social Security payment went up because of the COLA, some of that increase was offset by the higher Medicare Part B premium. For most people, the net result is still a little bit more money in their pocket compared to last year, but the increase might not look as big as you expected when you actually see the deposit in your bank account. If you look at your statement or your account and the increase seems smaller than you were expecting, the Medicare premium is probably the reason why. Something else that is worth talking about is the issue of Social Security and taxes, because this surprises a lot of people who are new to retirement. A lot of folks assume that Social Security benefits are completely tax-free, and while that is true for some people, it is not true for everyone. Whether your Social Security benefits are taxed depends on something called your combined income. Your combined income is your adjusted gross income plus any non-taxable interest you earn, plus half of your Social Security benefits added together. If that combined income is between $25,000 and $34,000 for a single filer, up to 50% of your benefits could be taxable. If your combined income is above $34,000, up to 85% of your benefits could be taxable. For couples filing jointly, those thresholds are $32,000 and $44,000. Now, this is not something new that started in March, but it is something that people are thinking about and dealing with right now as they file their 2024 taxes and plan ahead for the year. If you are unsure how taxes affect your Social Security benefits, it is really worth sitting down with a tax professional or at least using one of the free tax preparation services that are available to seniors like the AARP Tax Aid Program. Let us also talk about what is happening with Social Security online and in person, because the SSA has been making some changes to how they operate and how you can access your benefits. The My Social Security online account has become more important than ever. You can use it to check your payment history, see your benefit verification letter, update your direct deposit information, get your Social Security statement, and much more. If you do not already have one of these accounts set up, getting one set up is one of the smartest things you can do. You can go to ssa.gov and create your account in just a few minutes. And having access to that account means you are never left in the dark about what is happening with your benefits. Now, there has also been some news and some concern in recent months about the Social Security Administration itself, staffing levels, office closures, and wait times. If you have tried to call the SSA recently or visit a local office, you may have experienced longer wait times than usual. This is something a lot of recipients have been frustrated about, and it is a real issue. If you need to contact the SSA, the best advice is to try to do as much as possible through the online portal first, because that is usually faster than waiting on hold or trying to get an in-person appointment. If you do need to call, try calling early in the morning when hold times tend to be shorter. And if you need to visit an office in person, call ahead and try to schedule an appointment rather than just walking in. Let us talk for a minute about fraud and scams, because this is really important and it comes up every single time there is a major Social Security announcement. Scammers are sneaky and they are paying attention. Whenever there is news about Social Security changes, benefit increases, or new laws like the Fairness Act, scammers jump on that as an opportunity to try to take advantage of people. You may get a phone call from someone claiming to be from the Social Security Administration, telling you that your benefits are changing and they need to verify your information. You might get a text message or an email saying the same thing. Here is what you need to know. The Social Security Administration will never call you out of the blue and demand your personal information or your Social Security number over the phone. They will never threaten you with arrest or legal action if you do not act immediately. They will never ask you to pay for anything using gift cards or wire transfers. If you get any kind of contact like this, hang up. Do not click any links and report it to the SSA's Office of the Inspector General. You can do that by calling 1-800-269-0271 or going to oig.sa.gov. Protecting your Social Security information is just as important as understanding your benefits. One more thing that is happening in March that a lot of people are curious about is the subject of working while receiving Social Security benefits. This is something that trips a lot of people up. If you are under your full retirement age and you are still working while collecting Social Security, there are limits to how much you can earn before your benefit gets temporarily reduced. In 2025, if you are under full retirement age for the full year, you can earn up to $22,320 without any reduction in your benefit. If you earn more than that, $1 in benefits will be withheld for every $2 you earn above that limit. Now, the important thing to know here is that this money is not lost forever. Once you reach your full retirement age, the SSA will recalculate your benefit and give you credit for the months your benefit was withheld, which means your monthly payment going forward will actually be a little higher. But in the short term, if you are working and collecting and earning above that limit, you will notice a reduction in your payments. And March is a month where some people are starting to see those reductions kick in as the SSA adjusts for 2025 earnings. For people who are already at or past their full retirement age, this is not an issue. Once you hit full retirement age, you can earn as much as you want from working, and your Social Security benefit will not be reduced at all. This is another reason why it can make sense to delay claiming your Social Security benefits if you can afford to. Because not only do you avoid those earnings limits, but your benefit amount also grows by a certain percentage for every year you wait beyond your full retirement age up until you turn 70. Speaking of delaying benefits, let us talk about the bigger picture strategy for a moment. A lot of people start collecting Social Security as soon as they turn 62 because they need the money or because they figure they should grab it while they can. But the trade-off is that starting at 62 means you get a permanently reduced benefit compared to what you would get if you waited. Your full retirement age depends on when you were born, and for most people currently reaching retirement age, it is 67. If you claim at 62, your benefit could be reduced by as much as 30% compared to what you would get at 67. And if you wait until 70, you get what are called delayed retirement credits, and your benefit increases by 8% for every year you wait beyond your full retirement age. Over the course of a long retirement, those differences can add up to tens of thousands of dollars. Everyone's situation is different, and there is no one-size-fits-all answer, but it is worth thinking through carefully and ideally talking to a financial advisor or at minimum using the SSA's retirement calculators online. As we wrap up, let us just pull everything together so it is nice and clear. March is a month where millions of Social Security recipients are going to notice real, tangible changes. The 2.5% COLA means bigger monthly payments, and for many people, this is the first time they are really feeling that bump in their day-to-day budget. The Social Security Fairness Act is bringing relief to millions of public sector workers, teachers, firefighters, police officers, and government employees who were unfairly penalized under the old WP and Go rules. And many of those people are receiving their updated benefit amounts or notices right now. Payment dates are following the usual schedule, but the calendar layout of March means some of those Wednesdays feel different than what people were used to. Medicare Part B premiums are still being deducted from payments, which means the net increase might look a little smaller than the headline COLA number, and the SSA's online tools and resources are there to help you navigate all of it. From checking your payment schedule to updating your information to understanding your new benefit amount. If there is one thing I really want you to take away from this video, it is this: do not leave money on the table, and do not get caught off guard. Know what your benefit should be, know when it is coming, know how to check it, and know how to protect yourself from people who might try to take it from you. Social Security is your money. You worked for it, you earned it, and you deserve every single dollar of it. Stay informed, stay connected to your account, and if anything ever seems off with your payment, do not wait. Reach out to the SSA right away. Thanks so much for watching, and if this helped you or someone you care about, please share it with them, because this is information that everybody on Social Security needs to know. We will see you in the next